We are ready to take action against other crypto companies violating U.S. securities law. Here's what Gary Gensler, the SEC chairman, announced a few months ago. Well, he's making his move now. The U.S. financial watchdog has decided to hit the world's two largest crypto exchanges, Binance and Coinbase, head-on, one after the other. First, it was Binance last Monday, with an announcement shared on Twitter by the official SEC account. Backed by a quote apparently said in 2018 by Binance's former CCO, it went something like this: "Dude, we're operating a freaking securities platform on American soil without any authorization." The day after this tweet, it was Coinbase's turn to face a complaint from the American financial authorities. So what's really going on here? What's this all about, undeclared securities or an unapproved platform? What impacts will this have on the crypto ecosystem? Let's explore all of this in this video. Early in the week, the SEC unveiled two letters accusing Binance and Coinbase respectively, and it's safe to say that the U.S. regulator isn't pulling any punches. On Binance's side, there are no fewer than 13 charges against the platform, as well as its founder, CZ. Gary Gensler himself chimed in on the official SEC statement, adding that CZ and Binance have engaged in a vast network of deception, conflicts of interest, lack of transparency and communication, as well as simply illegal activities. CZ was quick to respond to this tweet, of course. Before we dive into the SEC's accusations, it's important to note that as early as 2019, the company had been forced to launch an entirely new entity in the U.S. under the name Binance US due to the American legislation that Binance was not adhering to. Here, all the accusations are against Binance US, and the SEC has no power, well, in theory at least, over the rest of Binance's international activities. So, what is Binance US being accused of? First, the SEC accuses the platform of not properly registering with the regulator to offer exchange, brokerage, and clearing activities, a deliberate choice according to the regulator. One of the SEC directors, Gerbel Gruwal, has spoken out in support of this claim. According to him, CZ and Binance entities knew the rules and consciously chose not to follow them in order to maximize their profits. Essentially, it's true that as an entrepreneur, you always have a choice: ask for permission or ask for forgiveness. Of course, this depends on the penalties involved. But if it's only financial, the founder of a company might decide to prioritize the growth and development of their company and deal with regulatory issues later. Even if Binance has to pay tens of millions in fines in this case, they would probably do the exact same thing the same way, because it went well and it was worth it. I'm not saying if this is right or wrong, but I'm talking here purely from a business perspective. Binance charged ahead without really asking anyone's permission, and now they're big enough to afford a team of lawyers and possibly even influence the authorities' decision given their weight in the country. A little over a year ago, just Binance US was valued at $4.5 billion. That's how tech heavyweights like Uber and Airbnb have operated. They aggressively penetrated this market, then dealt with lawsuits from regulators later on. The difference, though, is that the power dynamics between these two industries and finance are not at all the same. When you mess with Wall Street, you're touching a nerve. But let's get back to the accusations. The SEC also highlights in its report a very opaque management of the company. The U.S. Market Supervisory Authority, for example, accuses Binance US of sending client funds to Merit Peak Limited, a third-party American entity controlled by CZ. This information was shared by several traditional media outlets without understanding the role of this company. This isn't the first time that the name Merit Peak Limited has appeared in the media. Last March, the CFTC, the U.S. government entity responsible for commodities, was already pursuing Binance and CZ for trading against its clients. Apparently, there are 300 accounts on the platform directly owned by Merit Peak, Sigma Chain, Binance, or CZ himself that were making winning trades against their clients. This is known as insider trading, and it is, of course, illegal. As we write the script for this video, the details of the transactions are still hazy. We all hope this isn't another setup like FTX Alameda scenario. The American watchdog also criticizes the crypto giant for not making enough effort to restrict American clients' access to the international platform. And more importantly, the cherry on the top, the SEC accuses Binance of offering for sale and exchange, in an unregulated manner, assets considered as securities. As a reminder, or just for your information, the subtle but fundamental difference between a financial asset and a security lies in whether or not there's an investment contract between the seller and the buyer. We'll get back to this a little later. You have to understand that the moment you enter the category of financial securities regulated by the SEC in the US, the AMF in France, or FINMA in Switzerland, you're playing a completely different game. If you want to issue shares of a company or debt on the market, you'll have to provide a number of documents to the regulatory entities and to investors to show good faith. and to explain in detail the ins and outs of the financial product you're proposing. So basically, what is your business? Where does the return come from? What are the risks? And a whole lot of other information. We're very far from just simple website and basic PowerPoint presentation, as most crypto projects do when they issue their tokens. Putting together a file for the Swiss FINMA, for example, requires hiring specialized lawyers who could prepare all of these documents. And the wider the audience you want to reach, the thicker this file becomes. When you don't have much of an audience, it's not really a problem. No one cares if you issue a token and sell it to your family and friends. However, when you reach a wider audience, and the token reaches a significant market cap, then you attract attention because you potentially affect the savings of the average person who have the power to complain to the regulator, who will then be accused of not doing their job. Companies that allow buying and selling of stocks, for example, are very tightly controlled. Crypto exchanges are not up to par today. It's a bit like comparing McDonald's sanitary procedures with those of a small country brewery. You're not doing the same thing, so you don't apply the same standards. If you start running an international restaurant chain like a small dive, then that could pose some problems. And to put it very simply, this is what the SEC is accusing Coinbase and Binance of today, at least officially. Now, as you know, US regulation is always very vague when it comes to crypto. This is exactly what led Coinbase to sue the SEC a few weeks ago for lack of clarity on what to do and what not to do. So now the tables have turned. However, for Gary Gensler, things are very clear. All cryptos are securities except Bitcoin. What's strange, then, is that in these letters sent to Binance and Coinbase last week, only about 60 are mentioned, considering that there are more than 10,000 in existence today. And the least we can say is that this list is full of surprises and seems totally arbitrary. It includes BNB, Binance's internal token, but also its stablecoin, BUSD, as well as tokens from other well-known projects like Solana, Cardano, Polygon, and Cosmos. And then there are also others, much more obscure, like the UST, the stablecoin of Terra Luna, which has already pretty much been buried, Ethereum Max, a highly suspicious project that has been promoted by Kim Kardashian, a well-known crypto expert as everybody knows, or even the BCC of BitConnect. The veterans will get the ref. But all joking aside, this list is very weird, very eclectic, and it's hard to grasp the logic of the SEC. What falls into this category and what doesn't? Nobody seems to agree on the subject. However, everyone refers to the famous Howey test, which is usually used to determine if an asset is a financial security. This test revolves around 4 questions. Number 1, is there a financial transaction? So basically, is there money involved? Second, is it a common enterprise, meaning the union of several investors looking to achieve a common goal? Third, is there any expectation of profit? Do investors expect their capital to grow? And lastly, does the success of the project depend on specific identifiable third parties? But these questions are very difficult in the case of cryptocurrencies, particularly with the concept of DAOs, the decentralized autonomous organizations. That's why there's so much debate about this today. All right, we talked a lot about the case of Binance US. What about Coinbase? In fact, as I mentioned in the introduction, the SEC is also suing Coinbase for violating rules regarding the trading of securities. Well, here too, it's not really a surprise. The American company had received a letter in March from the SEC to warn them that a procedure was underway and that would soon find out what was happening. Unlike Binance, which primarily operates offshore, Coinbase is 100% American. It's a regulated company that has been listed on the NASDAQ since 2021. In other words, the SEC authorized the company to be listed on the stock exchange in the United States in 2021, and now they're suing them for not following the existing regulations. It really doesn't make a lot of sense. Reactions against these attacks from the SEC were immediate. Bill Hagerty, a U.S. senator, believes, for example, the SEC's approach is indefensible and that it's explicitly using its role to significantly hinder the development of the crypto industry. This is one of the things we wanted to talk about in this video, among others. The establishment is blowing up as many bridges as possible between the old and the new world to prevent a capital flight. Senator Cynthia Lummis also defended Coinbase in this tweet. It was she who, a few weeks ago, submitted a bill to finally provide a clear framework for this new industry in the U.S. With what happened this week, many people think that crypto is dead in the U.S. and that all companies will gradually leave for more lenient jurisdictions. But I think it's too soon to jump to any conclusions. In my opinion, we're not there yet. If this Lummis-Gillibrand bill is adopted, the United States could go from the last to almost first in class of terms of regulation. In this text, most cryptos are considered commodities, so raw materials, and would therefore be supervised by the CFTC and not the SEC. Game over, Gensler. Only tokenized financial securities would fall into the category of securities. Now, it's very difficult to evaluate the probability that this law will be approved. There are huge power struggles behind the scenes. Some people realize perfectly well that the United States has much more to lose rather than to gain by being too strict in terms of regulation. So, others see crypto as an existential threat to their political agenda. In any case, for now, Gary Gensler is likely to continue his crusade. It seems relatively likely to me that in the coming days or weeks, we'll hear similar announcements against other crypto platforms with activities in the United States. I immediately think of Crypto.com, but also Gemini or Kraken. Things could take a slightly different turn if the SEC seriously attacked Tether's USDT, which represents more than 75% of the market share. If my goal was to really regain control of the crypto industry, that's what I'd do anyway. Nevertheless, it's essential for regulators and lawmakers to develop clear, well-defined rules that allow innovation to flourish while protecting investors and maintaining market integrity. To wrap up this video, which I hope will have helped you better understand what's happening in the United States at the moment, I'd like to emphasize the fact that there's a significant difference between accusations related to securities and those that would involve much more serious fraud on the part of Binance. Some of these allegations are completely justified and indisputable, while others are much more subjective. In this case, the ongoing SEC versus Ripple lawsuit, which has been going on now for about 3 years and seems to be coming to an end, will also be decisive in the case of Coinbase and Binance. If the XRP token is ultimately not classified as a security in this lawsuit, it would fundamentally challenge most of the SEC's complaints. In any case, you can't know how bullish this makes me on Bitcoin. The orange star soars above all this chaos without ever being concerned. Tick tock, a block every 10 minutes.